All right, let's dive into one of the wildest financial turnarounds I've seen in a long time in the AI chip world. We're talking about the Chinese tech firm Cambricon. They just dropped a quarterly result that sent shockwaves through the market, turning years of burning cash into, well, an explosion of profit. But, and this is a big but, behind these incredible numbers is a massive gamble that could change everything. Let's get into it.
So this is the number. This is what all the fuss is about. 4,436%. That's the year-over-year revenue growth Cambricon just posted. I mean, it's a number so huge you'd think it's a typo. It is not.
And yeah, that leads us straight to the big question, right? For years, this company was basically a giant R&D project, spending billions without much to show for it on the sales front. So how on earth did they suddenly flip a switch and unlock this kind of growth? That's what we're going to find out.
To really understand what happened, we've got to zoom in on this one single game-changing quarter. This wasn't just, a good quarter. No, this was a fundamental shift. We're talking about a company going from potential to powerhouse seemingly overnight.
First up, the revenue, the top line. In just the second quarter of 2025, Cambricon brought in 1.77 billion yuan. Now, to give you some perspective, in that same quarter last year, that number was under 40 million. So yeah, this one quarter completely rewrote the company's entire financial story.
But this number, this one might be even more important. A positive operating cash flow of 2.31 billion yuan. That is a massive swing from the loss they had just the quarter before. What this means is that Cambricon isn't just making sales on paper. It's become a cash-generating machine, and that is a huge sign of real market strength.
Okay, so we've seen the what, the absolutely explosive numbers. Now it's time for the how. What exactly did Cambricon do to make this happen? Let's dissect this thing. Let's look at the anatomy of this breakout quarter.
You can literally see the acceleration right here on this chart. Revenue jumped almost 60% from the previous quarter, and net profit more than doubled. But then you look at last year, and the growth is just off the charts. This is not a comeback story. This is a company hitting escape velocity.
So here's the secret sauce. It's a concept called operating leverage. Think of it like this. For years, Cambricon was building a massive, super expensive factory that was its R&D. Now the factory is built, and suddenly these huge orders are flooding in. So after they cover their fixed costs, almost every single new dollar from a chip they sell goes straight to profit. Their R&D costs as a slice of their sales, it plummeted from over 500% to just 12.5%. That's the magic right there.
And this is exactly how they pulled it off. This wasn't about selling a few chips here and there. No, they aimed their most powerful cloud products at huge data centers. They landed whale customers, the biggest players in China's internet and finance scenes. They kept their prices strong with a fat 56% gross margin. And get this, they started getting paid up front before they even delivered the chips. That tells you they have some serious bargaining power right now.
Okay, so it all sounds incredible, right? A perfect success story. But just when you get comfortable, the whole narrative takes a very sharp turn. Because hiding just beneath these amazing numbers are some pretty serious risks that could put the whole thing in jeopardy. This isn't a simple story. It's a high-wire act.
And here it is, the single biggest risk, plain and simple. This chart shows where Cambricon's revenue came from in 2024, and analysts think the picture today is just as, if not more, lopsided. A mind-boggling 79% of all their sales came from one single customer. That means Cambricon's entire future is tied to the whims of just one client.
This quote from an analyst report really spells out the danger. The chips Cambricon is making, they're probably super customized for this one giant client. So, if that customer suddenly changes their mind, or cuts their order, or finds someone else, Cambricon could be stuck with billions in inventory that nobody else can even use.
And this is the size of that bet. Right now, Cambricon is sitting on 2.69 billion yuan worth of inventory. Now, on one hand, that shows they're really confident about future orders. But on the other hand, it is a massive financial gamble. It's basically an all-in poker bet that their one giant customer keeps on buying. To really understand this gamble, you have to zoom out. We need to look beyond the balance sheet and see the bigger picture. See, Cambricon's story isn't just about one company's finances. It's a really important piece in a much larger geopolitical chess match for tech supremacy.
This chart right here tells a huge part of the story.
Because of U.S. export restrictions on high-end chips, China has basically put up a wall and said, we're going to build our own. This domestic substitution policy has created this huge, protected market for local champions like Cambricon. And that domestic market share is set to just explode, creating a multi-billion-dollar opportunity that's basically off-limits to foreign competitors.
And inside this protected bubble, Cambricon is in an all-out race. The finish line? Catching up to the global king, NVIDIA. Now, their hardware is getting pretty close. Their latest chip is at about 80% of the performance of NVIDIA's A100. But the real battle, the holy grail, is software. They're trying to build their own software ecosystem called Newware to compete with NVIDIA's CUDA, which is the real moat around NVIDIA's castle.
And it's not just a race against NVIDIA, they've got serious competition at home, too. But what this slide shows is that while rivals like Haiguang are growing fast, Cambricon's performance in the first half of 2025 was just on another planet. They went from a huge loss to a profit, while others are still playing catch-up. Right now, it looks like they are winning the race to be China's AI chip champion.
So, after all that, what's the takeaway? We've seen the insane growth, we've seen the massive risk, and we've seen the bigger strategic game being played. It all boils down to that classic investor debate. Are you a bull or are you a bear on this company?
Here are the two sides of the coin. The bulls will tell you Cambricon is the clear leader in a protected, strategically vital market. And hey, they've proven they can execute and print cash. The bears, well, they look at the exact same company and see a terrifying dependence on one client, making a huge bet on inventory that could blow up in their face.
And you can see this massive uncertainty reflected right here in the analyst price targets. They've mapped out three completely different futures. In the pessimistic case, if that big risk hits, the stock could get hammered. But in the optimistic scenario, where they keep winning, the upside is enormous, and the neutral case is sitting right there in the middle, perfectly capturing this balance of huge opportunity and huge risk.
So that brings us to the final question we have to ask. Is Cambricon a true national champion, backed by policy and on its way to dominating one of the most important tech markets in the world? Or is this whole thing just a spectacular but incredibly fragile success story, a high-stakes gamble on one relationship that could vanish tomorrow? The answer is going to be fascinating to watch, but for now, that 4,000% question is very much wide open.